morning, good afternoon, good evening, traders from across the globe, and welcome to the 859th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, how are you? Today is April 23rd. We're filming a video for you trading on April 24th, 2012. Video 859, and in this video we have a question to ask. On the board there is a question here, and we will frame this lesson around this topic. What is supposed to happen when a market drops below a bear flag? Traders, there are bear flags still flying all over U.S. indices, just like in last night's video, but we're starting to break down below those flags now. What is supposed to happen next? Generally, you will find that a market comes down below the bear flag. It either just tumbles or it goes back up. It tests the bottom of the bear flag and breaks. We all know technical analysis doesn't work perfectly, and futures trading can be extremely risky and can cause substantial financial loss. So if you do not use stops, if you don't recognize a stop is your best friend, and if you don't have risk capital to lose, you shouldn't be in this game, because there are days where good analysis is just going to go bad. Now, we don't expect that out of the bear flags for tomorrow, but that's basically what happened with our euro analysis for trading on Monday. We did analysis what we think was really well. We got caught long and got stopped out in the euro yesterday. So we relived that analysis at the site, and you know what? Basically all of us agreed the analysis was pretty good, showing you that not every day is a good piece of technical analysis going to always work out. But it does most of the time, and that's what we live by. So make sure your stops are in and do your analysis properly and believe in it. It'll work, and then it won't. It'll work, and then it won't. Part of the game, part of your life if you have chosen to be a trader for a living. All right, onward. The bear flags are flying all over U.S. indices charts. What is supposed to happen when a market drops below the bear flag? Basically, traders, if you have a bear flag, you've had a market that traded up and then dropped down and created what looks like a flagpole. This is simply a series of days where the market travels lower. Then the market, for some reason, starts to move up slowly, almost in a parallel channel. That is a bear flag. What happens when you come out of the bear flag? You break down. Usually, you just continue. Every now and then, you go back up and test the bottom of the flag, but you still break down eventually anyway. That's what happens when you come out of the bottom of a bear flag. On most occasions, this will be your end result. We have bear flags flying all over U.S. indices charts. The day I just showed you right here just happened on Monday. We broke below the line, the bottom of the bear flag, and we broke down to here. So we're down one day below the bear flag. The question is, what is supposed to happen next? What happens when a market drops below a bear flag? You will see that it continues on. I'm going to do a chart segment now to prove that to you and show you what I have found. Traders, if you like the analysis I'm about to show you, come on down to livewithoscar.com. Grab a free membership, come into my trading rooms, and allow me to teach you the analysis that we teach one another here and we teach at the OMNI Trading Academy. Now, again, as I said, not every piece of analysis will always work, and even good analysis, if it just doesn't get, if you can't get in, you can't get in. We had a wonderful bear flag. We showed you the video last night. We told you gotta go short the indices, you gotta go short NASDAQ, you gotta go short ES, and the markets broke. But we never got filled. Sadly, we never got a fill. The market got right about up there, but it didn't go high enough to get us in. So even a good piece of analysis might not always work. That should never deter you from doing your analysis and trading exactly what you found on your charts. The chart segment I'm about to show you should help you recognize what does happen when we drop below a bear flag. If you'd like to learn analysis in depth, come on down to my OMNI camp, which I'm holding June 8th, 9th, 10th, and 11th. It's a Friday, Saturday, Sunday, and Monday. Traders, if you're thinking about coming out to OMNI camp, be prepared to work. Don't expect to come to Vegas and turn this into a drunk vacation. It's not going to happen. I work you traders from sun up till sundown until you get the techniques right and you prove that back to me. So if you are thinking about coming out, don't just send me an application unless you're serious and you want to learn what's going on. If that's what you'd like to do and study with me for 4 days, come on down to livewithoscar.com, click the OmniCamp banner, and I will return your message. Traders, with no further ado, let's go look at some charts.
Traders, Oscar Carboni is holding another OmniCamp live in Las Vegas. OmniCamp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
Traders, the first chart I'm going to show you is the Russell 2000 daily bar chart. What is supposed to happen when a market drops below a bear flag? Well, let's do the whole setup first. I'm sure this chart looks familiar to you. I've been putting it before you in video after video, just like in last night's video. Here we go tonight. The Russell 2000, this is a daily bar. You can see the purple parallel channel pointing us down. Then there's the red bear flag. So there's a bear flag. Failure at the green average. The market gets into the bear flag and fails right here at the green average. It also coincides with failure right at the top of the purple channel. So it fails at the top of the flag, it fails at the top of the channel, it fails where the average meets all of it and finishes forming the bear flag. What does it do next? On Monday, it breaks down below. What should happen next? Traders, if you just look back and take a closer look, right here is a well-defined bear flag right after the high was set. The bear flag produces 1, 2, 3, 4, 5 days of breaking down, which then the 5 days of breaking down creates another flagpole. The market starts moving higher, creates the flag we just discussed, has the failure at the average, and breaks below that flag. What is supposed to happen when a market drops below a bear flag? Exactly what you've seen happen here. A few down days, a consolidation, and more break to the downside. That's in a market that you would call a bear market when this happens. We don't know what we have right now. We do know this. Just a few weeks ago, we put in highs and it's backpedaling. Is that a bear market? No, certainly not yet. We haven't even taken out the previous low here. But if we do, we certainly will have to start paying closer attention to what may be a bear market developing. For now, we are still in a long-term bull market with a pullback, but you have to trade the pullbacks, right? This pullback has not one, but 2 bear flags in a row, and we just broke down out of the second one. Let's look at another chart. Traders, the DAX, the German DAX daily bar chart. A well-defined bear flag, the same one I put before your eyes in last night's video and the one before that. Here's your flagpole. Here's your flag. Here's the breakdown below it. Serious breakdown below the flag. Look back a little further. Look at this flag right here, traders. You had another bear flag. It created a flagpole when it broke down into a second bear flag. It's below that bear flag. What is supposed to happen when a market drops below a bear flag? 90% of the time, or somewhere around that level, you will find that it breaks below the bear flag. Now, a bear flag, sometimes the market will break below, turn around, come back up and test the bear flag, and then have a serious crack. That does happen sometimes. The one we're in now looks like it's just going to go. So let's see. The next chart, traders, E-mini S&P daily bar chart. A really well-defined bear flag. Failure at the top of the purple channel, failure at the average, and it breaks below the flag. That looks bearish to me. You should get at least another down day out of that. And then we can look at the Dow Jones Industrial Average. Traders, Dow Jones Industrial Average, look at this well-defined bear flag. Scary is this. It broke below a major support line 2 weeks ago. Fails at the average after it creates the bear flag. Then it breaks below the bear flag. This is Monday. That is not good. The Dow has basically led us through this entire up move here, and now it's starting to lead us to the downside. Let's hope it finds legs before we take out these lows, because if we do that, this market has trouble. Now, opposite of all of the indices that I've been showing you in these videos has been this very same bar chart video after video. Why am I showing you the bond bar chart? Because we had a major resistance hurdle that if bonds could not get above, you'd see bonds crack, and that would send S&P higher. But if bonds can get above, the opposite happens. Bonds continue on, S&P feels the pressure. Bonds have gotten above so far. Tonight is a second night. So far, Monday it's above. Monday night to Tuesday, it's still hovering above. That is likely a breakout buy signal for bonds, which means more pressure on the emini. That means the bear flags that we just went over will likely be valid and continue on to the downside. Traders, that is what I've seen so far. Take a look at this for yourselves. So traders, there is my technical argument, and I am sticking to it. Now, what is supposed to happen when a market drops below a bear flag? Well, I hope the lesson that I just instructed you with helps you with tomorrow's trading, because the likelihood is down below the bear flag. Now, traders, in all the things I looked at, which could be bullish or bearish for the stock market, for the S&P NASDAQ, everything that I normally use to gauge a market, the OMNI, everything is pointing straight down. In fact, across the spectrum on the opposite side, you got bonds pointing straight up. There is one thing that I seen that was bullish out of everything, and only one. It was Apple. It put in a bull swing day. Apple puts in a bull swing day on the close Monday. Apple reports Tuesday afternoon. A bullish swing day after a big drop before Apple reports tells me that Apple probably goes up from here. And tomorrow is a really big testing day for someone like me. In all the years I've been trading, there's never once been a stock that's so influential that how goes that stock, how goes the stock market. If in fact that one bullish light that I found was a swing day buy in Apple, if that takes these markets higher tomorrow and our shorts get stopped out, that means that for the first time in my history, we have a market or a stock that's so big that you cannot trade the futures without charting that one as well. That is dangerous. That should not happen. Absolutely, somebody should do something about Apple having that sort of influence on any indice. Now, I'm not saying that is what happens tomorrow. What I'm saying happens tomorrow is analysis, bear flags are bear flags, and down we go. I don't care what Apple does. But if the only bullish piece of analysis I can find, which was an Apple chart, does springboard this market to a big fat rally tomorrow, that is a really big telltale sign for all of us traders. You need to listen to that. If that's tomorrow's event, you need to start looking at Apple very closely. Let's hope that's not the case. I don't ever want to be held hostage to a stock. I don't like stock trading. I don't recommend stock trading. I don't trade stocks myself. I do not like to be held captive in the markets I'm trading by a stock. Let's hope that's not the case. I'll see you all at the site, traders. LiveWithOscar.com. As they said 50 years before I was around, be there or be square. Traders, I will see you at the site. Remember, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in, and make sure of that. Emotions are out. What is is supposed to happen when a market drops below the bear flag. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.